On day 2 of the third annual Investors Conference powered by FBN Capital, the focus was on the asset management industry and how it can be made more viable. Topics for panel discussions included making the buy side relevant, market facilitators' perspective, and harnessing the potential and overcoming major limitations.
I'm saying this because the repo market is not developed. The money market is not developed. The FX market, which has been on for years, also has not developed the hedging instruments. So we need to work on all these stock markets before we can start talking about derivatives, which will allow institutional managers to be in a position to hedge the different risks in that portfolio.
There were also presentations on the evolution of the buy-side industry in South Africa, Nigeria's asset management industry product evolution.
Absolutely, and you want the best 50. We have 1,000 in South Africa and about 1.2, 1.3 trillion rands worth of assets, so it's about $150 billion. And I think that's way too many. It's really hard for people to choose between 1,000 mutual funds. And so what they do is they have to pay someone to advise them on the choice. Or maybe they pay someone to run a fund of funds that selects which mutual funds to invest in. It just adds layers into the chain. So I think the next stage in South Africa is probably trying to get some of that complexity out of the system so it costs people less to make choices. And of course you have less of this kind of deer in the headlights effect where people are trying to make their choices.
And also a Q&A with the regulatory body on pensions on so far impact of the reforms and the way forward for the asset management industry in Nigeria.
There's a general chart out there that PFA money should go into infrastructure. I know in the first question you've now told us that PFAs are cautious, right? What are you doing to allay fears, right, that this money cannot all go into infrastructure? Some of it can go into infrastructure, but you have to be cautious about it.
In terms of infrastructure, that caution is not as bad as it is in the other sides, because world over, pension funds are generally used for long-term investment, and infrastructure, I don't see any that is longer than it. It's not a matter of allaying fears. The comment I would like to make on infrastructure is more of the development of a suitable products. The PFAs are willing. Investment guidelines are allowing of it, but what I see is the dearth of suitable products that these funds can go into. On the other hand, what we have is a constant dilage from asset managers. So we have this fund, we want pension funds to go into it, with a careful disregard of what our regulations say. And all I get is, and I believe all the PFAs have the same pressure as well, is we have this product, I need you to relax your rule so that you can invest in my product. And I really think that the outlook should be slightly different. The product we are about to float on the market, does it meet pension requirements? Because we will be desirable of having pension funds invest in this product. If we had that approach prior to structuring the vehicle, then it would be a lot easier for pension funds to go into, and this is what I keep saying, engage the institutional investors, the PFAs, engage the regulators where always open, so that by the time your product is coming in the market, you're not looking for waivers, you're not looking for relaxations of any regulations.
The financial market plays a key role in the asset management industry in Nigeria. And today, to enhance that sector and to make liquidity even available to fund various projects and to enhance financial inclusion, regulators and players must engage and create the avenue for increased activities. In this panel discussion, with the focus making the buy side relevant, market facilitators' perspective, Mrs. Louisa Eni Omokoro, Director CIS Securities Exchange Commission, Mr. Haruna Jallo Waziri, Executive Director, Business Development, Nigerian Stock Exchange, and Mr. Mbola Onadele, Managing Director, FMDQ, OTC, discuss on ways this can be made effective, with Mr. Michael Yebola, MD, FBN Capital Asset Management, as moderator.
As an asset manager, what do I stand to gain from the existence of FMDQ? Thank you very much. I thought the striking was a good concept. The way you're using it to assist is what for FMDQ, if you remember, the OTC market was more or less not organized by any Securities and Exchange Commission licensed stuff. It was more or less driven by the activities of our association called the Financial Markets Dealers Association. For some time, we thought and reasoned that this was not the best way to have the market develop, and also caused a fragmentation of our capital as people tend to see things from different perspectives. So equity market was seen as capital market, and every other thing was seen as retail. And I think some of the work we did with the collective investors informed what we did. Because even if SEC says, and even the regulators used to say that in Nigeria, when you talk about bond, the central bank will tell you that's not good. DMO was the visual on behalf of federal government of FGM bonds. And we have limited capacity to look at what's going on in the secondary market activity. But if mutual funds under SEC are buying all these different products in markets that are not organized, then there's a problem.
We also have to have proper government policies that actually encourage companies to come and list. So, for example, today, if MTN decides to list, their tax bills are likely to go up because everybody will know how much they're making, and maybe in some areas introduce certain levies just because they feel that we can make money. So, tax harmonization is very important to encourage companies to list like an institution levy. And even in some cases, maybe government should look at what I call tax rates for companies that are listed, or even talk about certain benefits within the context of awarding government contracts and the rest of it, so that we can encourage companies to do this. Again, for the Nigerian Stock Exchange, is to provide that platform for the companies issuers to come and raise capital, and for investors to control this capital that are supporting. I think in the last 1.5 years, we've introduced certain things to actually encourage both the issuers and investors to meet in the stock markets. Things like market making, securities lending, yes, I want to take care of the work on that. Really short selling for investment and for trading as well. Another thing that we've introduced is the use of technology. So 5% faster than it used to be. So 5 times faster than it used to be. It's called NASDAQ, which is the new open yesterday. And so simply migrated it from 29th of October this year. And I think things are working very well. So in all of that, providing a platform, doing business development, ensuring that the market is fair down to the regulatory framework, as well as technology. Next thing we need are issuers to come where investors can actually begin to participate in that.
Of course, we talked, insurance brokers are all over the place. The mobile money platforms are things that is the thing that's all over this country. But we realize that the KYC requirements of the mobile money platforms are not as robust as the main market requires. That's why it's so important that we review the KYC requirements, so that the mobile money platforms can be a platform where investors can actually invest through to subscribe to some of these funds. When you go abroad, you find supermarkets selling mutual funds to anybody. So just as you're going to do your grocery shopping, you're just there by the corner, it's not a big deal, you can subscribe to them. So what I'm saying is that the Commission is working hard to ensure that some of these platforms are available, because we find that that's one of the restrictive things that is making investors not come to this segment of money, because they ask, where do I find the fund managers? How do I invest? But when they go around and they see that these platforms are there, it will be much easier. And one of the other things we have looked at is bringing in a new class of market operators called independent financial advisors. Of course, there's a fear that if you have these independent financial advisors, they'll go around collecting money from everybody. You can't account for it. So what we're looking at is that they need to be attached to fund managers. What would they do? They generally be the marketers all over the country for the funds. But of course, we use custodians now. So they won't be having an opportunity to collect funds from the investors. What they will do is they will market, explain what the funds are, and then direct their investors to go and invest. And we're working very hard to come up with rules, but then the onus will be on the fund managers to ensure that they actually monitor and supervise those independent financial investors. So when going further, probably they need to bring some guarantee from the local governments or wherever they are to preclude a situation where they run away, you can't find them. I mean, there's so much unemployment in the country. So I mean, if that can come on stream, it will provide jobs for some people.